Ben ritrovati lunedì mattina sul floor del New York Stock Exchange, un inizio settimana piuttosto difficile, vediamo infatti flessioni piuttosto marcate a ribassi di ben oltre 150 punti per il Dow Jones. Ne parliamo con il mio ospite qui sul floor, come vedete Kenneth Polcari, Managing Director per ICAP Equities. Kenny, thank you so much for being with us.
Thank you for having me as usual.
So Kenny, it's definitely not a good start of the week. It seems that what the market wants from Europe not necessarily is what Europeans want for their countries.
That's right. But, it's also, don't forget, it's not just Europe either. It's also in Asia because it started last night in Asia, right? They got a weak flash PMI number out of China. So there's that continued concern of what's happening to China. There's also the concern that the Asians were the first ones to kind of sit and think about what had gone on here at the G20, the money that Christine Lagarde raised. What's it really mean? Who really committed? The BRIC nations they committed verbally, but they didn't actually commit an amount of money yet. They want to see some austerity measures be put in place, so there's still a lot of uncertainty. So the weakness started over in Asia. It flowed right into Europe. And, Europe, then they had their own negative economic numbers. But then they also have got this whole French election thing, which is really, it puts a whole new spin on it, although we've been talking about it. Certainly the French people are frustrated with the condition of their economy. They're frustrated with the direction that their leaders are taking them, and I think that was clear in the first election. So Sarkozy's got some work to do if, in fact, he wants to maintain control. If he loses, then you really have to start all over again because then Angela Merkel's got to now establish a new relationship with this new leader, and he clearly doesn't have the same mindset that Sarkozy had, which is causing this concern.
That's why the market is so worried about it.
Exactly right, because if there's a change of leadership in France, what does it mean for all the work that they've done on this European debt crisis? Is Francois Hollande gonna buy into it? Is he not? Is he gonna change it? And you can feel the frustration from the French people. They're getting a little bit fed up with not only what's going on there in the total Eurozone, but what's going on in their own country. And so it's creating a lot of angst.
And also a lot of analysts are pointing out that they're very surprised by the far-right emergence. And it's not that actually surprising when there is such a weak economic environment.
And that's right, and that's clearly a concern for the global economy. But, it makes perfect sense, like you said, because people are frustrated. And I even said it in my note this morning, everything that they're frustrated about in France, about taxes going up, no jobs, lack of growth, deficit out of control. I mean, it sounds very familiar with what's going on here in the United States. And so I hope people in this country are standing up and paying attention because you can feel it as we move closer to our own election in November, the groundswell of frustration from the American people.
So it could be a preview of what is going to happen here.
Well, I could absolutely be a preview of what's going to happen here.
Now, instead, talking about the economy, saying about the economy, you were saying that in Asia we saw a bad reaction this morning also to some economic figures. Again, contraction of manufacturing there together with a contraction of business activity in Europe sends more bad signals.
Absolutely it does. And then you think about Christine Lagarde raised $430 billion additional dollars for IMF. Now the world, we knew she was trying to do that. She was actually looking for more money. The fact is she raised the 430. Now you get these negative macro numbers and it brings it right to the surface again is what if she really has to use this money? Because everyone's hoping she can raise it but doesn't need to use it. But in fact, if the macro numbers continue to be weak, she might have to put this money to work. That's only signals that the situation is worse than everyone thought it was. So it causes concern again, and it's definitely a risk-off day. Right, would look for the S&P to bounce off of 1350, which is what it looks like it wants to do. I'd like to think that it's going to hold there. That would represent a good 6 or 7% pullback from the recent highs from our first quarter. So that would be a healthy pullback, and then I think it'll churn for a while.
And also, Ken, in your notes, you made some comments about how the market reacted last week. We saw a lot of interest again on big companies and investors that are starting to be a little bit confused. Right. Are they really waiting for the Federal Reserve to do something? Are the fundamentals really okay?
Right, and I think that what the market's telling you today is that it's not really sure that it believes the fundamentals are are what they are. And it's also not sure that all these great earnings reports, they keep beating the number, but again, we'll say it, is that the bar had been lowered so much that it's almost impossible for these big U.S. companies to beat this bar. If they couldn't beat this lowered bar, we've got even a bigger problem. So the sense is that people are finally understanding that beating the number, beating the estimate, is not necessarily as good as it really looks, because what's the guidance going forward, and was the number lowered so much that it's almost impossible not to beat it. And I think people are getting frustrated, and that's where the confusion is. You also see it kind of, on the down days, when we've got selling pressure on the market, the volume spikes a little bit, which indicates distribution. Now, certainly there are buyers there, because for every trade there's a buyer and a seller, but the buyers are in control and saying, you want to sell it? Here's my bid. It's down 50 cents or down $1. And if the sellers are selling it, they're much more interested in just taking risk off the table than they are so much concerned about price. They just want liquidity and they want to get their money out. So the buyers are clearly in control.
And this week is going to be very intense talking about earnings, especially we are waiting for Apple's earning. Apple officially today is on a correction mode.
Right.
It's down over 10%,
Right.
and is actually influencing the market a lot.
Well,
so this week we can expect a little bit of volatility in that way.
Well, listen, if you look at Apple directly, I think the stock was up some 65% from the January, from where we started the year. And if you look, it went straight in a straight line, completely vertical. So a pullback in Apple makes perfect sense, considering I think as most people will agree, it really had gotten well ahead of itself, and it's dragging certainly down the NASDAQ Tech Index for sure, and it's certainly part of the S&P. It's not dragging the Dow down, which is why you saw a little bit of that disconnect, right? The Dow was up at the end of last week, but NASDAQ had gotten crushed. The S&P was flat. And that really tells you that there's some money. People are starting to think back to basic investing 101 in the big Americana blue chip dividend-paying stocks. And I outlined that in my note this morning, all the big names that you know and the safety of those stocks. And that would make perfect sense going into an economy that people are not so sure about.
Now, briefly, FOMC this week, a lot of people are saying that we're not going to see anything until June. What do you expect?
And I think that's absolutely true. Now, if the market absolutely starts to completely fall out of bed, then you might see Uncle Benny say something. But I don't think you're going to get anything from him on Wednesday. I think, and the market doesn't expect much. And so I would agree with you that it's going to be you're not going to hear anything until June unless we completely go off the edge.
So brace ourselves.
That's it.
Thank you very much, Kenny, for being with us.
Thank you. It's always a pleasure.